And it confuses you sometimes. I wish Jennifer was here because she brought it up. When you have the antecedent debt, okay? When you have an antecedent debt and you are the person, Jennifer, what I told you was wrong. I want to correct it because I want you to understand it the right way. When you are the antecedent, when you have the antecedent debt, the general partner that picks up the antecedent debt, you are only responsible for your capital contribution. You are not unlimitedly liable with respect to antecedent debt. That's by law. Everyone understand that? Where I'm going with that? When I told you that the person could be sued and have to pay that, that's not correct. Okay? They are otherwise liable for all of the debts after they become part. But as a part of the law, they are only responsible for the debts that were incurred before they became partners up to the amount that they can do.
Okay, so when a third party collects a debt for something prior to them joining the partnership, and they sue the general partnership, usually they're suing the general partnership as it was before they joined the partnership.
No, they're suing it as it is now, but the amount that's due. See, here's what I think may have been confusing. I always use the fact that there was no money left. Okay? But let's say, I can't take too much time because I'm cutting into the other time, but let's say the general partnership has $1 million, okay, in capital that's available. Okay? This general partner, this general partner, this general partner is me. I put in $100,000. Okay? There's an antecedent debt of $10 million. Okay? The partnership has $1 million. It gets sued. All right? The whole $1 million is what's in the company. Since $10 million is owed, that whole $1 million is gone, right? Including my $100,000 that's in the $1 million. Okay? Still available, right? Once it's gone, my obligation is done. Okay? The $10 million is owed, but we only got $1 million available. Once my $100,000 is gone, I'm done. I'm not on the hook for the other $900,000. These two guys are.
Okay, I understand that, but I think what was confusing me was
So I
the whole collective.
Yeah.
No, I think it was confusing that the general partners are all equally liable to the partnership. I think that's what was confusing.
Right, they are, but in the case of the antecedent debts, it's only up to capital. Everyone understand that? Sorry if I confused you because I told you the other way, but this is the way it should be. And if you want to read it up, it's on page 60 in the book, in the example at the top. It says very clearly that one Angela's capital contribution.
That's a different book.
Oh, shoot. It's not in there. Oh, no wonder. Okay, well, it's what I said, basically. The capital contribution of this person is only $100,000. That's all they owe out of this million and the 10 million. Okay? These guys will owe whatever this is, whatever that is. Got it? Clear? Yes? No?
Yes.
Okay. Limited partnerships. Remember what I said at the beginning, that we'll look at how increasingly individuals are trying to limit their liability, but yet still run a business the way they want, right? In the case of a limited partnership, that's what they're trying to do. It's a statutory creation, meaning that it's run by statutes, and they're both general and limited partners. That's the key. Limited partnerships have both general and limited partners. What that means is there are general partners who have management authority and unlimited unlimited liability, and there are limited partners who only contribute capital and don't have unlimited liability. A limited partnership has partners who invest in capital, manage the business, and are personally liable for the capital for the partnership debts. So you're going to have a limited partnership where you got general partners that are going to put in money, and you're going to have limited partners that are going to put in money. Right?
Right.
But the general partners are going to manage the limited partnership, and because they manage the limited partnership, they have unlimited liability. The limited partners are also going to put in money, but they are not going to manage the partnership. Because they do not manage the partnership, they have limited liability with respect to the debt. Got that?
The general partner of the corporation.
In the corporation, a person, a trust, right? So here's the key: you must have at least two people, and that people can include a corporation, a company, or a trust, or some other legal entity, right? So it's got to be at least two. At least one has to be a general partner with unlimited liability, and at least one has to be a limited with limited liability. That's the key. Got it? Now, a limited partnership has no restrictions on the number of limited or general partners. Even a corporation can be a general partner. And if a corporation is a general partner, then the shareholders of that corporation are only liable up to their capital contribution in the corporation in the form of their share price. Yeah.
In both partners of the corporation?
Yes. The ROPA, or Revised Uniform Limited Partnership Act, governs limited partnerships. And again, that's a model law that a state can adopt as its limited partnership law. This is how it looks. You've got a limited partner who provides capital and has no personal liability, and then you have a general partner who provides capital and has unlimited personal liability with respect to third parties. So why would you want to do that? Why would people want to be involved in a limited partnership?
So they can get a share.
Yeah. Well, what type of mentality would do something like that?
Personal liability.
Yeah, let's say I'm a super smart guy, right? I have a fantastic business concept, and I've got great business acumen. I have very little money. But I have an idea that if someone would partner with me, we could become billionaires. So what am I going to do? Find somebody with money, and I'm going to say, look, let's become limited partners. I'll provide the muscle as far as expertise and knowledge and a little bit of money, and I take all the liability. You provide the capital, and we'll both profit. Right? So these people are the money people. These people are the expertise people. Put the two together. Now, I have a lot of money to spend, but I don't have a lot of time to go to a business that I want to profit. So you got a great idea. I'll put up the capital. You run the business. Okay? Limited partnership is formal. You can't do a limited partnership growth. Why? Because you're allocating liability between one another, right? Somebody's unlimitedly liable. If a big situation comes up, somebody's going to say, hey, I wasn't right? So if you don't formalize a limited partnership, it does not exist. That's what's meant by it's a creature of statute. It has to be formally put together with Secretary of State filing and the public disclosure.
So if you don't specifically file as a limited partnership, then it should be a general.
You're something other than a limited partnership. You could be a general, you could be something else, but you're not a limited partnership. And the key is because of the liability issue. So it has to be formed because in general partnership, verbally, by word of mouth, right? So that's what it's going to default to, most likely, because you can't be a sole proprietorship too. So it's going to most likely default to a general partnership. But you want to make sure if you're the limited partnership that you make it formal, especially if you're the limited partner. If you're the general partner, it doesn't really matter. You're liable anyway, right? But the limited partner is going to make sure that it's formally acknowledged to be a limited partnership. Because if they don't, they're on the hook just like that. And how do you do it? A certificate of limited partnership is a document that two or more persons, remember that person can be a corporation, has to execute and sign, containing the name, purpose, names and addresses of partners, agent, and principal place of business, the contributions of each partner, any capital contribution, and it must be filed with the Secretary of State. And it's not formed until it is filed with the Secretary of State. And what do I mean when I say agent? Okay, everyone know what that means? The agent for service of process? Right? That's the person who is authorized to accept the lawsuits against the company. Right? So, a certificate of limited partnership has to be kept current by filing with the Secretary of State anytime something changes that requires notification. That would be a change in the capital contributions, the admission of a new partner, the withdrawal of a partner, continuation of the business after a judicial dissolution, or the withdrawal of the general partner. You have 30 days to notify the Secretary of State by way of a amendment to your certificate of limited partnership, saying to the public, these things have changed in our partnership. The name of the limited partnership may not include the surname or last name of a limited partner unless it's also the last name of a general partner or the business was that name before. And why is that the case? Because if you're a limited partner and you have your surname in the limited partnership, that gives the impression to the public that you're a general partner, which carries unlimited liability. And if you don't correct that, and the public thinks you're a general partner, and a lawsuit happens, guess what? You are a general partner. And with that, you have unlimited liability. So the first thing you do as a limited partner in a limited partnership, the first thing you're going to do when you file your certificate of limited partnership is to make sure it's correct, right? Make sure that my name as a limited partner is not a part of the limited partnership. Make sense? Other restrictions. The name cannot be the same or deceptively similar to the name of other businesses. Again, you're going to check with the Secretary of State, do a name search. Capital contributions, the money you put into the business, can be in the form of cash. It can be property. I can donate one of my buildings that I own to the limited partnership. That's my capital contribution. Or a promissory note. I promise to put in $100,000 in 6 months. Or other obligations. All of those are considered cash that you're putting into the business to become a partner. And partners or creditors can bring a lawsuit to enforce the promise. Different. In a partnership, you can sue each other as partners. So if I'm a limited partner and I promise to contribute $1 million to the business in 6 months and I don't do it, the general partner or the limited partnership itself can sue me to enforce that promise. Got it? Yes? No?
Yes.
Defective formation is when a limited partnership is not properly filed, or some other requirement for the creation of the limited partnership is not met. Meaning you didn't name an agent for service or process. You didn't provide a address for all of the partners. It's defective formation. In the case of defective formation, all the partners could end up being liable on limited. So what the partner that has limited liability needs to do to keep from being liable as a general partner is to file an amendment correcting the defect. Yes.
Is this ever an issue besides when you need your partnership to be formalized and you didn't think you're going to go purchase something completely as a partnership? Otherwise, I don't really see how it's that urgent of a matter to just fix it.
Well, it's urgent of a matter because until it's fixed, you're liable. So if it takes you 30 days to fix it and the business does a contract within that 30 days and you haven't fixed it, when you get around to fixing it, if there's a default, you're liable for that issue that happened while you were waiting to fix it.
So you choose not to do business.
Yes.
Reasonable?
Well, as a limited partner,
right,
what your obligation to do is fix it, but until you fix it, withdraw from participation in any profits of the business.
Okay.
That's how you fix it until you fix it.
Okay.
So the LPA sets forth the rights and duties of the general and limited partners, the terms, and the dissolution and termination terms. And if there is no agreement, the certificate serves as the article. The limited partnership agreement can specify how profits and losses are allocated. And if there is no agreement, profits and losses from the limited partnership are shared on the basis of the value of the capital contribution. So if I don't have an agreement, the Model Act says whatever profits you put in, that percentage, say you put in, if there's $100,000 that's put into the business, and the general partner put in 60% or 60,000, the limited partner put in 40% or 40,000, then whenever we get profits, okay, if it's $100,000, the general partner is going to get 60,000. If it's 40, the limited partner will get 40. And the same with losses. If you lose $100,000 and there's no money in the company, I'm going to have to pay 40,000. This person will pay 60. That's our agreement. Okay? Right to information, the limited partner has a right to go to the general partner and say, show me your records, show me how our business is going. Why is the limited partner going to the general partner? Why does that happen? Because the general partner is the one who's managing, right? The limited partner is silent with respect to management. So if they really want to know what's going on with the business, they have to go to the person who's managing. That's the general partner. And the general partner owes the duty to open up those books and show the records. And not only that, but to keep the records that include the list of the full names and business addresses of each partner, the certificate and all amendments, and copies of the state, federal, and local tax returns. New partners can be added only upon the consent, new limited partners, I should say, upon the written consent of all parties. You can have an agreement that says otherwise. It could be an agreement where you say, to admit a new limited partner requires just a majority of consent. The admission will be effective after it's agreed that we will admit a new partner and we file the amendment. With respect to a general partner, all members have to agree to a general partner being admitted. And you cannot make an agreement that says otherwise. So while we can decide whether or not how we admit a limited partner, we must all agree, both limited and general partners, unanimously in order to add a general partner. Now, we know what the difference between domestic and foreign businesses are, right? A domestic limited partnership, just like a domestic corporation, just like a domestic any form of business, simply means it's a business in the state in which it is formed. So if I file my limited partnership agreement in California, I'm a domestic California limited partnership, right? If I also do business in Texas, I'm a foreign limited partnership in the state of Texas because my state of filing is California. So domestic simply means the state in which you are born. And every other state, you are a foreign business. Yes?
Now let's say like you wanna make shoes and then you make a contract with China to make shoes. So what is it?
Well, you would be a foreign corporation, an alien corporation with respect to China.
Foreign.
Yeah. Foreign, okay, foreign simply means another state. Okay? Say Toyota. Okay? Toyota does business in California. Okay? Toyota is incorporated in China, is it Japan? Okay. Okay? So when Toyota does business in California or any other state in the U.S., it's an alien corporation. That means a company that is incorporated or formed in another country, but does business in the U.S. It's an alien company. All right? So we've got domestic here in California, but does business in other states. You're a foreign company, a foreign limited partnership in Texas, in New York, in Hawaii. You're foreign. All right? And by corollary, if I form my company in Delaware as a limited partnership, I'm a domestic limited partnership in Delaware. But if I do business in California, I'm a foreign limited partnership in California. Everyone got that?
This may be off subject, but I've seen a lot of filings for companies where they file in Delaware. Why do they file in Delaware?
I can't get to that now, but it will be crystal clear when you get corporation.
Okay.
Most corporations, big ones, file in Delaware. There's a reason it's management decision. The Delaware courts favor management over shareholders in disputes. That's why companies incorporate in Delaware. But that's like day 5.
Okay.
Day 5. So we got this though, right?
Right.
Foreign and limited. Now, when you are a domestic California limited partnership and you want to do business in Wyoming, you can do so by simply filing in the state of Wyoming a certificate of registration. Simply says to the state of Wyoming, we are a domestic California business and we want to do business in your state. And here's our certificate registering with your state. Got that? What that does is, this allows you to do business legally in the state of Wyoming. If you do not do that, you can still do business in Wyoming, but you can't bring a lawsuit. So if I go go to Wyoming and don't file a certificate of registration, I have no standing in the courts there. So if I do a contract with someone in Wyoming and they breach the contract, I have no recourse because I never filed a certificate of registration.
Is that like both ways? They have their recourse.
No. Let me finish. If they sue me, I can always defend myself. Because remember, it's a business. You always have the right to defend yourself. Right? So if I'm sued, if I go to Wyoming, didn't follow the certificate of registration, and a breach of contract happens where I breached the contract, the business in Wyoming can sue me, and I can defend. But if the reverse happens, where they wrong me, I can't defend because I have no standing. Because I didn't follow my certificate of registration. Make sense?
You cannot sue a person in Wyoming if they did you wrong.
Right. But you can defend yourself if you do them wrong.
Now, does this apply to internet businesses?
Well,
no?
internet is a whole different
Okay.
animal. It's basically that, but it gets much more technical because you have to start proving different things.
Well, if you have an internet business, do you file a certificate of registration off the state?
No, you don't have to do that.
Okay.
Because I don't want to get, it's only 6 days. So that gets into interstate commerce and intrastate commerce, and you don't have time to get into all that. But I can talk to you after class, but not for the class.
Mm-hmm.
So, general partners of limited partnership have unlimited liability for the debts and obligations of the partnership. Limited partners are liable only up to their capital contributions. To give up the right to participate in the control and management of the company in exchange for having limited liability. Got it? Again, ad nauseum. General partners have the management rights. Limited partners give up these rights in exchange for limited liability. Now, a limited partner can do certain things. They can be the agent of the limited partnership. They can be an employee, contractor, or even a general partner or a consultant. Now, it might seem counterintuitive that you can be a limited partner and a general partner, but you can't. Here's how. And I'll give you this book example because I can read it. One instance is on page 644. If a general partner, if a limited partner, or rather a limited partner is liable as a general partner, if his or her participation in the control of business is the same as that of a general partner, the limited partner is liable only to persons who reasonably believe him or her to be a general partner. So if I and Lauren and Jennifer are partners in a limited partnership, but I'm the limited partner and they're the general partner, and we go out and we contract and negotiate to buy widgets, and I need the third party to believe that I'm a general partner as well, that general partner or that third party, in the event of a breach, can come after me as a general partner, even though I'm a limited partner. So with respect to all the other debts of the partnership, I have limited liability. But with respect to the party that I led to believe I was a general partner. The same with the defective formation. If my name is on the partnership name, and we're called a limited partnership, if my name is on the partnership, then third parties have a right to believe that I'm a general partner. And so until I correct that, I'm a general partner. Third instance is I participate in management. As a limited partner, I'm not supposed to do that. Right? I'm supposed to contribute capital and shut my mouth and get a problem. Right? participated management that can bring me into the general partnership issue would be unlimited for my liability. Got it? Now, there is an issue. I want you to understand that concept, but there is a law that changed under the revised Uniform Limited Partnership Act that says that limited partners can participate in management now and still stay limited partners if they agree to do that with the general partner. That confusing? Before you even get to that, it's part of the revised Uniform Limited Partnership Act, right? It's called the proposal, right? They add that in because remember, people are always trying to get the limit of liability, right? But they also want control. So they revised it and said, okay, we'll ease up on this requirement here if everybody agrees. So if that's the case, you can be a limited partner and participate in management and still have your partnership.
This is a lot of lawsuits. People are trying to get more money out of those business. They're trying to push out limited partner really behaves.
Oh yeah. Oh yeah. Yeah. Because if you prove that, then you swing them into being a general partner. Because usually, the case is usually that the limited partners are the ones with the money.
Right.
It's the general partner that has the expertise in management skill. But the limited partner is usually the deep partner first. So yeah, you're going to want to try to swing in the guy that has the money. So that's why in most cases, the limited partner is going to be smart and not do what the role says they can do, which is become a general partner, right? If it's going to swing them into having conflict of liability, right? Usually it's going to take one shut-ups. Because a limited partner oftentimes is a person with a lot of money, and they can be limited partners in a whole bunch of businesses, but they just don't have the time to participate in management. They just want profit. I'll give you some money to show me you can make a profit. I'm not going to manage you. I just want profit. So they're a limited partner in a whole bunch of businesses, right? Yes, the third party agreement is going to try to go after them, but that's why it becomes important to stay out of management. So you have a clear distinction that, hey, I just contributed, I'm counting, didn't participate in that. Make sense? Yeah.
You said participating management as the third party, and other ways they lead a third party.
Yes, yes. There's another one too called personal guarantee. Because a limited partner is the person with the money, if I'm a third party and I have a limited partnership that's trying to get money from me, say it wants $100,000. A brand new limited partnership. Limited partners put in $100 million. Limited partnership is putting in, say, $60 million. And it wants $100 million to open up a prefabrication factory. This lender looks at, they have $60 million in the bank, they want $100 million. It's an okay risk, but I want to see the financials of all of the partners. And if it comes out that the general partner has 20, let's say $20 million in the bank, and the limited partner is a billionaire, do you think I'm going to make a $100 million loan to the limited partnership based on the general partners only being unlimited? Would you do that? So what's going to happen? This lender is going to require a personal guarantee by the limited partner. They're going to say, I'd be happy to make you a $100 million loan, But I need a personal guarantee from the limited partner such that if the company defaults, I can come out with $1 billion that the limited partner has. And if you don't do that, I won't make the loan. So, in this case, you have a limited partner who has limited liability for all debts of the company except for this debt, in which they have unlimited liability because they signed a personal guarantee. Got it? Is that confusing? So, a creditor can enforce the personal guarantee if the limited partnership defaults. So they would come after this limited partner for the $1 billion or for the $100 million that's owed to the limited partnership. So the general rule is that limited partners are not individually liable for the obligations or conduct of the partnership beyond the amount of their contribution. And the three ways in which they would be are defective formation, they form it the wrong way, using their name, for instance, or didn't file the children agent for service of process, or didn't put in the address, it's defective, and then the limited partner can be personally liable. If they participate in management, they can bring themselves into the unlimited liability area with a control rule. And if they sign a personal guarantee. To dissolve a decree of dissolution or a decree of judicial dissolution is one way. If a general partner withdraws from the limited partnership, it will be dissolved unless there's an agreement specifying otherwise. And if all the general and limited partners agree, obviously they can withdraw. And if there's a term specified and that term comes up, it's dissolved. Once it is dissolved, it winds up its affairs, files a certificate of cancellation with the Secretary of State in the state in which it filed the certificate of limited partnership. And then the assets are distributed similar to the other creditors, and then partners with respect to unpaid distributions, capital contributions, and any remainder proceeds. Limited partnership. Any questions? Yes.
What is the involvement? Where's the line?
I'm sorry?
They advise and advise the general partner.
Yes. That's what it is.
Where's the definition?
Not being involved in management means the day-to-day operations.
Oh, so there's like angel investors
Oh, yeah.
that are definitely pressure.
Yes. As long as certain kind of pressure to get a result. But how is where you become problematic.
They go to the board.
Oh yeah. Yeah. They can, but they probably want to be quiet. They want to go to the board meetings and hear what's going on to make a decision as to whether they're happy with the board meetings or not. And in some cases, they have to be there because they're still partners, right? So certain decisions are going to require that they be there to vote on. So as a limited partner, you have the right to be in a meeting because you still are an owner of the company. Right? It's a management aspect. Because the limited partnership agreement, they say that we need a supermajority of all partners when we decide whether to merge with another company. Well, you're going to be there, right? And you want to be at any other meeting. When it comes to the management and which way we go, you're going to vote on any issues that you have to vote on. That's how you're going to participate. You're going to participate in management. But when it comes to the policy and getting things done, you stay out of that because that's the general management. Otherwise, you are kind of sliding yourself into potentially being a manager. All right, limited liability partnerships. LLC LLCs are almost the same thing, so we're just going to cover it very quickly. A limited liability partnership, or LLP, is what most of the law firms are nowadays. Remember, what I said was, you find yourself moving more and more to the point of having limited liability but keeping control. So a limited liability partnership is where all of the partners have limited personal liability for the debts. Their liability to third parties is limited to the capital that they contributed. Just like a limited partner and a limited partnership. So they got the best of both worlds, right? Only the money that they contributed are they liable for. If that money's gone, they have no more liability. But at the same time, they have the ability to manage the company. Sound better? That's what the law firms do.
Wow.
They are formal in that articles of partnership, which you guys are one of the things that you're going to do, right? Have to be created by following with the Secretary of State in which the LLP is organized. It's domestic in the state in which it is organized, and it has to register as a foreign LLP in any other state in which it wants to conduct business. The key to this that works for the limited liability partnership is that most states require insurance, liability insurance, to cover the negligence and wrongful acts of the partners. That's limited liability partnerships. Now, the reason why it's so short is because before that comes LLCs. And an LLC is the same thing as limited liability partnership, except that it's for regular people like you and me. LLPs are for professional business, doctors' offices, lawyers, accountants. Back in the 2000s, early 2000s, some of you may remember Enron and WorldCom and all that fiasco. Well, the accounting firms, which were general partnerships at the time, were sued for giving false and fraudulent auditing reports that allowed WorldCom and Enron to continue in business. Because they had a strong, close personal relationship with a lot of the CEOs, and they would fudge the books in the auditing and deceive the public. Well, when the auditors like Anderson and Pete Marwick and some of the other accounting firms were sued, they got huge judgments against them, and because they were general partnerships, after the capital of the company was gone, the general partners had personal liability. They said, whoa, we can't survive like that. So they went to their legislatures and they lobbied and they got an LLP put in place for them, which gave them now limited liability, okay, and the ability to be managed. So now, all the professional companies like lawyers, accountants, doctors' offices, many of them, are now LLPs. So just the money that's in the company is what's available in the case of lawsuits, not the personal asset. Sound better than a general partnership? Heck yeah. Sound better than a sole proprietorship? Heck yeah. If you were given the choice between being a general partner in a law firm, where if any of your partners screws up and a multi-million-dollar case is screwed and the firm is accused of malpractice and all of y'all's assets are on the hook, which form of business would you prefer out of a general partnership and a limited liability partnership?
Limited liability partnership.
Absolutely. So tomorrow, we have our exam. We're going to do a 5-minute review. Something to take. If any of you don't pass the exam, you should be ashamed of it.
Oh, God.
That's how simple it should be.
Here we go.
Let me ask you some questions, okay? In the 5 minutes we have. A dual agency, what type of agency might be a dual agency? Someone tell me. When can I have a dual agency? What's the example? Real estate. And how can I have a dual agency if I'm an agent? From both sides, right? If both parties consent, I can have a dual agency, right? Is a sole proprietorship separate from a sole proprietor? Are they one and the same? Yes. With respect to taxes, are they one and the same? Yes. With respect to liability, are they one and the same? Yes. With respect to ownership, are they one and the same? Sole proprietorship and a sole proprietor are what? One and the same. Right? What are the obligations of an agent to their principal? With loyalty, with care, accountability, okay? Can an agency be terminated by operation of law? In what circumstances? Give me an example. All right. So would I have to notify anyone of the agency terminating? Who says yes? No one? Everyone says no? If it's by operation of law, do I have to notify anyone? No, because it's by law, right? All right, so really easy example. Can a general partnership be sued by the general partner? No. Can a limited partnership be sued by the limited partner? Yes. What about by the general partner? No. Can the general partner sue a limited partner in a limited partnership? Who said no? Why not? Can the general partners in a limited partnership sue the limited partner? Absolutely. If I'm a limited partner and I promised to give $100,000 to the company, and I did not, and we're suffering, and I'm the general partner that is in charge of the finances, and I understand that we're suffering because you, as a limited partner, didn't pay what you promised to pay, I can sue. Right? Are general partners in a general partnership limited in their liability or unlimited in their liability?
Unlimited.
In an apparent agency, who is the person who causes the apparent agency to exist? And who are the parties that are liable on the contract in an apparent agency? There's one third party, okay? And what about the usurpation of a partnership opportunity? Is that a breach in the partnership? What type of breach? Okay, breach of loyalty. Let's see. Someone tell me what an agency by ratification is. What is the limitation of a limited partner in a limited partnership? What is that limited? Capital contribution? Okay. 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 agent and I have been wrongfully terminated, do I have any recourse against the principal? Yes? No? What is my recourse? Wrongful termination? So, as a principal, I'm liable to an agent for wrongfully terminating them, right? An express agency is required to be in writing? Yes or no? Express agency. Can it be verbal?
Yes.
Unless, okay. 2 minutes. Who does an agent owe the fiduciary obligation to, and what is that obligation? Do they owe it to a third party? No? No? No fiduciary obligation? Robert is my agent. I contract with Robert to find me a buyer ready, willing, and able to buy a house that I'm selling. Right? Does Robert owe me a fiduciary obligation of loyalty? Yes. Allison is a buyer. Does Robert owe Allison a fiduciary obligation? Yes? No? He's my agent to sell my house. She's a buyer who wants to buy my house. Does Robert owe a fiduciary obligation to Allison with respect to my house? No? Okay.
Except good public policy.
Is there a way for Robert to be Allison's agent as well as my agent?
Yes.
In what circumstance with respect to real estate?
Both agree.
Disclosure and consent of who?
Both parties.
Both parties, right? And then you can do it. I think that's it. That's most of the concepts. If you don't get the test, you have to get the test. That's simple. It's not hard. 25 questions, multiple choice, true, false, a couple of fill in the blanks. But I guarantee you, you have read the material, and if you haven't read it yet, read it tonight. I've covered every question on the exam, at least the concepts of every single question on the exam. So there's no reason why, well, take that back. With respect to chapters 1 through 5. 6 we cover tomorrow. So really read 6 tonight, because you need to understand that. So if you have a good understanding of 1 through 5, you're good. Tomorrow we'll cover 6, we'll take a break, we'll have the exam, and we'll be done. Any questions on anything so far? No?
I have
A random question.
Well, I know.
Is it relevant to the material? I don't want to hold everybody else up. Ask me after class. Any other questions relevant to chapters 1 through 5?
Yes.
No? All right. See you tomorrow.
Yes.